Ever feel like you need a PhD just to understand like what's going on with the economy and the headlines? Like I do.
Yeah, so today we're doing a deep dive into the UK economy. Everyone keeps using the word stalemate. And in case you're wondering what that means, it basically means things are stuck, like no growth for 2 months in a row now. So we're going to unpack why that's kind of a big deal and what it means if you're living and working in the UK. And we've got all the latest data and expert analysis to help us with this.
Yeah, think of us as your like economic translators. We're here to decipher all the jargon and connect the dots. Exactly. And I think the first dot to connect is this whole flatlining thing we mentioned. So the Office for National Statistics, the ONS, they're the official source. They released the July data, and it's not pretty. Zero growth for the second month in a row. And we're not talking about like a minor blip here. This lack of growth is unusual, especially because we just had like a national election. Usually you see at least a small bump from the new government's policies.
Yeah, it's like the economy hit the snooze button instead of the gas pedal. This kind of suggests that there are some deeper issues at play here, something a bit more structural than just like a simple change in leadership.
Okay, so not just a temporary slump then. What's kind of dragging the UK economy down? Well, we did a deep dive into the data, and some usual suspects pop up, starting with the service sector. So we're talking retail, hospitality, transportation, all experiencing a slowdown. And this is important because, like, services are a cornerstone of the UK economy.
Yeah, imagine if you're a business owner in one of these sectors. This stagnation is like directly impacting your livelihood.
Yeah.
Fewer people dining out or going on holiday.
Yeah.
That directly affects your bottom line. And then for the rest of us,
Yeah.
it probably means we need to tighten our belts a bit. Maybe reconsider those impulse purchases.
Makes sense. Like a domino effect. And unfortunately, it's not just services feeling the pressure. Industrial production and construction are also showing signs of weakness. Although, this detail I found interesting. Car and machinery firms. They've had a particularly rough go of it lately.
Yeah, there's always these sector-specific nuances. But this could point to broader trends, like maybe some lingering supply chain hiccups, or even a shift in consumer demand because of what's going on with the economy. It's definitely something to keep an eye on.
On the watch list it goes. Okay, so let's talk about the elephant in the room, or I guess in this case, the Bank of England down the street. They're the ones calling the shots on interest rates.
Which, by the way, basically influences how much it costs to borrow money. And that has a ripple effect on everything, from mortgages to business loans. And they're facing a real dilemma right now.
This is where it gets interesting, right? Because on the one hand, you've got inflation. Prices keep creeping up on everything.
Yeah, what economists are calling sticky inflation. Because it's proving so difficult to get rid of.
Yeah, that's a major concern. But like you were saying, if you raise interest rates to combat that inflation, that could further stifle economic growth. Talk about a rock in a hard place.
Yeah, it's a real damned if you do, damned if you don't situation. Raise rates too aggressively, and you risk completely stalling the economy. But don't raise them enough, and you risk inflation spiraling even further out of control.
So what's the Bank of England going to do? Will they hold their nerve or hit the panic button?
Well, predicting central bank behavior is a bit of a fool's errand, but we can look for signals. For example, Deutsche Bank economist Sanjay Raja, and he's one to watch. He suggests that while slower pay rises across the UK are encouraging, they're probably not going to be enough to convince the Bank of England to start cutting rates anytime soon.
Sounds like they're playing a high-stakes game of economic chicken.
That's one way to put it. And it's important to remember that the UK economy isn't operating in a vacuum. What happens globally has a ripple effect. And right now, those ripples are turning into waves.
So these global headwinds everyone keeps talking about, how are they impacting the UK specifically?
Well, the UK is dealing with a lot of the same challenges as other major economies. That persistent inflation we talked about, the uncertainty in geopolitics. Supply chains are still messed up. And these aren't just like abstract concepts on a news ticker. They have real consequences.
And this is where it gets real for our listeners, right? What does this interconnectedness mean for their everyday lives?
It means that the rising cost of their morning coffee isn't just a local issue. It's tied to global supply chains and market forces. It means that planning for retirement or starting a new business, these decisions need to be made with the global landscape in mind. The UK economy is facing internal and external pressures.
Okay, so big picture, it's a wild world out there. But let's zoom back in on the UK. We've got a new government. What's their plan to navigate this economic tightrope?
Well, they're not afraid of making tough decisions. Higher taxes are on the table, never popular. But they say it's necessary to tackle the UK's growing debt. And they're also thinking about significant spending cuts.
Again, with the double-edged sword, right? You try to rein in debt, which is important. But Those cuts could also stifle economic growth, especially if they're not handled carefully. It's a very delicate balancing act, and I'm sure everyone's watching closely. But even with all of these internal factors we've got going on, there's one more piece of the puzzle we need to talk about, one that could make or break the UK's economic future.
You're talking about trade, right? We can't discuss the UK economy without talking about trade.
Right, Brexit completely changed the UK's trading relationship with the EU and the rest of the world, and it's been a bumpy ride, to say the least.
It has. And if we look closely at the data, we see a concerning trend. The UK's trade deficit is getting bigger, meaning they're importing a lot more than they're exporting. And that puts a strain on the economy.
Okay, so for those of us who don't speak economist, why is a widening trade deficit a big deal?
Okay, so imagine a business spending a lot more money than it's making. That's not sustainable long term, right?
Yeah.
It's the same with a country's economy. A widening trade deficit can make the value of the pound go down, and that makes imported goods more expensive. So that means everything from your morning coffee to that new phone you've been wanting could get more expensive.
So it's not just some abstract economic indicator. This directly impacts what people are paying for everyday things.
Exactly. And to really illustrate this point, let's hear from someone who works in the markets, George Roberts. He's a trader at eBree. It's a financial services firm. And he puts it pretty bluntly. He says, limping trade with the rest of the world could threaten the development of the economy ahead. The government should look to kickstart growth in this hugely valuable sector if it wishes to sustain the UK's economic achievements in the years to come.
He really doesn't mince words, does he? Trade is clearly a critical piece of this whole thing. So we've covered a lot, from the economy flatlining and sectors that are struggling, to the Bank of England doing its best and the UK's place in all of this global uncertainty, and of course those trade challenges. So it sounds like we've got a bit of a perfect storm brewing here. Sluggish growth, pressure from global forces, a new government still trying to figure things out, and all these trade challenges on the horizon. It's a little bit, I don't know, sobering.
Yeah, it's definitely a complex landscape, no doubt about it. But I wouldn't hit the panic button just yet. Uncertainty can also create opportunity.
Okay, so tell me more about that. Where's the opportunity in all of this?
Well, think of it this way. When an economy goes through a period of disruption like this, it creates space for innovation. Businesses that can adapt and find creative solutions, they're the ones that often come out stronger on the other side. It's a chance to rethink things. Get rid of old models and try new approaches.
So for businesses that are willing to be flexible, this could be their time to get ahead.
Exactly. And for investors, times like these can actually reveal hidden value. Kind of like when the stock market dips. It's a chance to buy low and hope for growth in the future.
That's an interesting way to look at it. So yeah, the headlines might seem kind of gloomy right now, but if you dig a little deeper, there's definitely potential for positive change and growth.
Absolutely.
Yeah.
And don't forget, the UK economy is actually pretty resilient. It's faced challenges before and bounced back stronger. It'll take careful planning and some bold moves from both policymakers and businesses, but I think the UK can weather this storm.
Well, there you have it. A little bit of cautious optimism. Thanks for joining us for this deep dive into the UK economy. We covered a lot of ground, but hopefully you've got a better understanding of what's shaping the UK's economic future. And hey, maybe you even spotted an opportunity or two along the way.
That's what we're here for. Remember, knowledge is power. The more you understand what's happening, the better equipped you are to deal with it. Whether you're running a business, investing, or just trying to understand the world around you.
Couldn't have said it better myself. That's all the time we have for today. We'll be back next time with another deep dive into a new topic. Until then, we'll see you later.